Time to connect then with our chartists and our guests joining in on the show. We've got with us Samit Chavan as well as Nooresh Merani, who are joining in on the technicals, as well as Pawan Parakh, Director and Fund Manager, Renaissance Investment Managers. Meantime, Pawan, let's get in your take on the markets as well. As we were highlighting at the get-go, there's a lot of events that the street will be tracking. And given that we're close to those all-time highs, what do you believe is likely to lead the direction forward? Do you think that the undertone of the market is looking positive?
Yeah, hi, good afternoon. So undertone is very clearly positive in my opinion, for the simple reason that, slowly, we're seeing consumption also coming back. The manufacturing part of the economy, which was ailing for many years, you've seen last year or 4 5 quarters, a lot of these companies like ABB, Siemens, and NT are reporting robust numbers in terms of both order book growth and margins. And as the consumption part of the economy also starts firing in, I think we've got all the engines firing for the economy. So take a 2 3 4 year view. My view on the markets continues to remain very positive, and I must tell that this time around, the rally is going to be far more broad based, unlike a very narrow kind of rally that we saw during the 2016 to 2019 period. So there are a lot of sectors, there are a lot of stocks across all large cap, mid cap, small cap, which we think should do very well, and the undertone very clearly remains positive.
Okay, so the undertone remains quite positive. But on your outlook then on the FMCG sector, HUL, for instance, has perked up in trade. You have the likes of Britannia as well as GCPL, or all in the spotlight. What is your expectation down the line when it comes to consumption trends, volume growth?
Yeah, so I think consumer is quite a mixed bag, because you've got some companies on one end which are seeing the resumption in rural demand, and then if you see at the quarter for commentaries, a lot of the companies are also mentioning that for their products they're not seeing rural demand coming back. But if you want us to take a holistic view, because as far as FMCG sector is concerned, rural consumption is a very big portion of their revenue. My opinion is that somewhere during the quarter 2 end or quarter 3 of this financial year, we will see the predictions are for normal monsoons. And if that were to happen, what we would see is resumption in rural demand as well. Because one good thing from a rural point of view that's happened is that inflation has moderated, right? Very clearly, as inflation starts moderating further, demand, there'll be more surplus in the hands, which will come back to spending. So take a 1 year view. I think, a lot of these stocks in the staple base, which have lost its mojo in last year, 2 3 4 years, should start gradually looking a bit exciting from here on.
Already seen in the FMCG names, and today as well most of these counters are sitting at the intraday high as we speak. But let's talk about some price volume buzzes as well. NTPC actually seeing a breakdown from the upward sloping support. The pattern resembles a bearish belt hold, so NTPC is in focus on account of that. One of the big drags at the index level, 2% lower. The biggest drag, however, is Axis Bank. That's down almost 3%. It snapped the 4-session streak of higher lows. Biggest single session decline is what we are witnessing on that counter in a month's time. And then of course, on the positive side, there's Dixon Tech, which has hit a 4-month high on an intraday basis, and volumes too are supportive, 2x the 20-day average that we have seen. Pawan, I know I'm not sure if you can talk specifically about counters, but Axis Bank, a curious case, because that's actually seeing a cut of almost 3%, and even the likes of Kotak, etc., haven't participated yet in the rally.
Right. So I think I think growth-based investing is the norm of the market for last 2 years or so. Whichever companies have actually lagged a bit on growth, those stocks have either fallen, have done nothing. I think for both these stocks, if you look at, while the entire banking space has done very well, their growth has been a bit moderate. And when I say about growth, I'm talking about loan book, because Kotak has delivered very strong improvement in NIMs, which has led to profit growth, but loan book, except for last 1 or 2 quarters, has been a little moderate. So in this counter, in this space, as long as investors don't see a visible pickup in growth, I think these stocks will remain sideways for a long period of time. Because from the entire sector point of view, if you see, there are a lot of investable options available. You've got HDFC Bank, you've got ICICI Bank, you've got NBFCs, you've got large NBFCs, you've got microfinance. A lot of the sub segments within the BFSI space look very interesting. So when the choice is abundant in that kind of a scenario, wherever you see some small concerns, those stocks are likely to remain sideways until you see a visible pickup in growth.
Pawan, if you had a blank check at this point of time and if you had to make investments, what are the 2 or 3 stocks that come to your mind?
Rather than giving stocks, I would rather give sectors because because
Sure.
of compliance restrictions, we're not allowed to speak specific on stocks. But in terms of sectors, I can definitely tell you three sectors which come top of my mind is first is BFSI, which includes both banks and NBFCs. Second is auto, and third is consumer discretionary space. I think for all these three sectors, India has got a huge runway of growth available. A lot of these companies in these sectors are really blue chip by nature, very strong balance sheets, very strong promoters, and most importantly, a lot of these companies are well placed to deliver growth despite a short term.
Sure.
Even if you have,
No, Pawan,
even
I
if
just
you
wanted to scratch that point further. When you say auto and consumption, these are two big sectors. Break it down for us. Two-wheelers, four-wheelers. Are you looking at the EV bets? And similarly in consumption, is it QSR? Is it your fashion retail? What's really catching attention?
Right. So within the auto space, as we just discussed about a couple of minutes back, two-wheeler sales are way below their last highs of 2018 and 19. We think, in next couple of months, the rural recovery should happen and two-wheeler sales should bounce back. In that kind of a scenario, if there are two ways you can play two-wheeler sector, one is through the OEMs and second is through auto ancillary. We are more positive on the auto ancillary space because there are a lot of companies in the auto ancillary space which are developing some very niche products for the electric vehicle space, and most importantly a lot of these companies are developing new products, new technologies which will enable them to grow faster than the sector growth rate. So within that space, auto ancillary, especially auto ancillary companies which are exposed to two-wheeler space, look pretty interesting to us. On the consumer discretionary side, I think apparels, footwear, uh, even for that matter, I would call a lot of these companies in EMS space, which also, in my opinion, fall in the consumer discretionary space. A lot of these companies have got very, very, very promising outlook. EMS space in specific is benefiting from China Plus One and PLI tailwinds. These are the few pockets within the larger umbrella where we think a lot of money can be made in the next, say, for example, 6 months to 1 year.
The market, Pawan, we'll let you go as well. Thank you so much for joining us today. But